Thanks for joining us. Joining us this morning is Walter Aylett, who manages the Nedgroup Investments Bravata Worldwide Flexible Fund. Walter is, of course, one of our longest-standing best-of-breed managers. Good morning, Walter. Nice to have you.
Nice to be back.
I think by now you're familiar with the formula, so let's get straight into it. As always, we do a bit of a recap on performance, so maybe just talk us through the last quarter, maybe the last year's.
Yeah, I need to correct you. I think I'm the longest standing fund manager.
You are the longest-standing.
Not one of them.
Not one of them. Indeed, the fund going back to 2005.
Yeah,
correct.
That's correct. So, where do you want me to start? Yeah, just on the performance, I think, often CPI plus 5 doesn't seem a long stretch, but I'm pleased when I look at, I'd say we're pretty satisfied for the last 6 months. Some of the investments we made 5-10 years ago have come through, and we'll talk about 2 of them later on. But we're satisfied. I think if you can preserve your purchasing power that way, you get about a 5 to 6% real return over long periods. You'll be pretty well. So we're satisfied. Yeah. Where did that performance come from? I think this is one of the advantages that we never speak about, this category of unit trusts, this worldwide flexible fund, where it gives us this ability to invest in South Africa and offshore, and being able to buy We Buy Cars. There's only one We Buy Cars in the world, and it's really added a lot of value. And I think of Renette, which is a company which we'll speak a little bit later again, but listed here, but really an offshore company. So, and then on the losers, Newton has been a bit disappointing. We hope the bad news had come to an end, and the rest are quite fine. They'll come back and give us a bit of money.
Keen to get into those spotlight ideas. I mean, you've held Renette since 2018, and it's been one of your top 10 holdings. Maybe just walk us through your thesis on that company.
Yeah, sure. I think, our commentaries, the simple message here is that long-term investing works. And if you have the facts on your side, ultimately, with good custodians of those assets, as the management of the holding company in this case, and those yellow dots show you where we consistently always bought as the ball got bigger. The news is out. It looks like they'll almost be 80% cash once they've sold PIC, and we're very, very happy with the way we invested. And I think this is the way to invest, not this frenetic 3-month views. And to hold something for so long, since 2018, is really the message I'm giving you, is that patience does reward the investor. And in a similar vein, I think We Buy Cars was spun out of Transaction Capital. This is a growth story, totally opposite to Renette. And I mean, it is quite an easy business to understand. And I think what we are trying to do is just go for the long haul. A lot of fund managers will take profits when they've doubled their money. We've not done that. And the danger is you pull out the rows and you leave the weeds behind. And We Buy Cars is I think, going to turn out to be a wonderful investment for us in this fund. And again, the mandate allows us to do this. So both investments are quite interesting, totally different, one offshore, one onshore. But I mean, this didn't start now. This started in the old days with Transaction Capital. They did not own We Buy Cars at the time. So again, you can't predict what's going to happen, and invariably the management pulls something out the hat, and then the new thing starts. So there was a lot of bad news around Transaction Capital. This is something that came out. The other theme that we're really interested in, and it's very similar to tobacco 5-6 years ago, when tobacco was seen as a non-starter. And we've seen it in the alcohol companies at the moment. And I think for us, first of all, alcohol is a little bit different to tobacco in that there's many different types of alcohol. And we spent, about a week with all the CEOs of the alcohol companies and tobacco companies in France beginning of last month. And I think what's very clear to me that there's a few shifts that are happening over time which will benefit the alcohol companies. Zero alcohol beer or zero alcohol liquids will become very attractive. And you can advertise it, which has a spin-off for the alcohol brands, like if you think of Guinness or Heineken. this move towards premiumization, as you move up the value chain, and you might drink less beer, but you'll drink a more expensive beer, and beer's beer. It's the same right across the board. And then I think, as I discovered in my travels, is that we are social animals, and we will sit around and have a drink with our family and friends. That's not going to go away. And our evidence of the research that we've seen is that as people get older, from the 18 to the 21-year-olds, bear in mind, 18 to 21 in America are not allowed to buy alcohol. So as they go past 21, then they start moving up. By 30, nothing's changed for the last 100 years. And I'm not too concerned about Gen Z. I think they're no different to me. And everywhere I traveled, what blew my mind was, first of all, the amount of vaping. I've never seen so much vaping in Europe. Be it, as I was in the southern Mediterranean areas, and they're known to smoke very aggressively. But then also the bars, I think it's more about affordability and nothing else. They were drinking cocktails, but only one, unfortunately. But so these trends are very much prevalent in Bravata. And when you look at the fund in September, you'll see quite a focus on these type of companies, such as we spoke about Budweiser, we've held for a very long time, Heineken, and even a company like Diageo, you'll see in the portfolio.
So very much capitalizing on those, same behaviors that you'll find typically in every generation. It's just the way it's being implemented.
Yeah, and very similar to the way tobacco was. No one wanted to own tobacco. These companies have gone through a tough time. I don't think they're going to go back to the levels that they were. But I really do believe that we want our whiskey, we want our beer, and the world's getting hot, I'm told. So you want to drink more beer, which I certainly found out. And yeah, I think human beings are human beings. And in this world of uncertainty with AI, you're going to be drinking beer. It's not an AI threat for me.
Those are good insights, Walter. I know, as you previously mentioned, and investors who know you quite well will know that you follow this tortoise type approach to investing. We don't tinker too much to the portfolio. Maybe just walk us through what the portfolio looks like at this moment.
It doesn't change very much. What has changed is this move away from the United States, which started about 2 years ago. We're about 20% the USA. And if you look at those USA companies, they're multinationals. And yeah, I think that's it wasn't a theme-driven way of thinking, it was more bottom-up. And we go a lot to the USA. And I'm just not inspired by the actions of management or government authorities. And I'm not talking about Trump. It's much more broader than that. I just don't think it's going to be a very kind place to investors. It will come right, and there's always opportunities in the US. But I think Asia has shown that its ability just to get on with it. And we think over the next 5, 10, 15 years, the winners are going to be in Asia, not so much the USA. Europe's also very interesting, Britain, and we've got quite a lot of money there.
Domestically, I know for a long time you didn't own much SA bonds. Just maybe quick your view on it.
We've traded the bonds, and we've traded them very well. As always, you never have enough, but we've really called it well, I think, and we've been consistently talking about this one theme. Again, using the advantage of the mandate, being able to go much more into fixed interest. I suppose you could criticize us for not being aggressive enough and not walking our talk, but that's the way it is. We just found too many equities to buy as well. But I really thought, I still think South African interest rates are pretty good compared to the rest of the world. That might change, because I think inflation is going to be a real problem in the next 5 to 10 years, primarily because governments need to print money.
Well, I think as borne out, from your returns of the fund over the long term, certainly your approach has worked and continues to work in investors. We hope that continues for a very long time. But with that, I think we'll leave it there. Thank you so much, Walter.
Thanks for those comments.
Thank you.
Thank you.